Welcome everybody. Today's stock that we are looking at is Corebridge Financial, ticker symbol CRBG, which is a diversified financial service company with a market cap of nearly $14 billion. Before we hop over to the company's website, I do want to say thank you to the commenter that suggested that we look at this company next. I did leave credit down in the pinned comment below, and please remember that I am always open to suggestions, so if you have a stock that you would like to see analyzed, please leave a comment down below and I would be happy to make a video for you. Alright, so over on Corbridge's most recent investor relations report from their Q3 2023 earnings, we can see some key highlights for the business. And what stands out to me immediately is the financial strength of this company and the increasing earnings that they're experiencing. We can see that their operating earnings per share of $1.05 was up 28% year over year. Their adjusted return on average equity up 230 basis points to 11.4%. Their core sources of income grew 11% year over year, with their base spread income going up 24% over that time, with their fixed index annuity premiums and deposits growing 27% year over year. This last part is especially good to see for a company like Corbridge because they have a lot of their annuities currently sitting at floating return rates, and so that is much less profitable and much more difficult for the company to predict future income from. So to see the company growing its fixed index annuity premiums is a very good sign, and it shows that the company is seeking to become more stable over time. They also have an RBC ratio that exceeds 400%, and so this is essentially talking about the liquidity and the financial health of the company, and so anything over 100% means you can meet your obligations with, the closer you are to 100%, the less likely you are. And so 400% is very safe and it's quite impressive. And what I have really enjoyed seeing is that their focused execution on bringing shareholder value. They returned $102 million via share repurchases, as well as a 55% payout ratio on their dividend year to date. The company sold off their UK life business for £460 million, and they closed the sale of one of their branches, Laya Healthcare, for $730 million, which they paid out as a special dividend to their investors in November of 2023. Their individual retirement segment makes up 52% of the contribution to their aggregate source of income, and this is seeing really nice growth in premiums and deposits, growth in their net investment spreads, their sources of income, and their adjusted pre-tax operating income. So great growth all around for their largest segment. Group retirement benefits is next, and that makes up 21% of the company's income. And this segment has not performed quite as well, with drops in their premium, a small drop in their base investment spread, and a relatively flat source of income and adjusted pre-tax operating income. Life insurance is next, making up 21% of their income, so pretty much the same as their group retirement benefits. And this segment saw good growth all around in their premiums, their in-force money, their sources of income, and their adjusted pre-tax operating income. And then finally, there's their institutional market segment, which makes about 6% of their total income. And this one is much more variable over time, as I understand it. It's actually the segment that I understand the least of the company. But we can see their premiums and deposits went up nicely, but the percentage of the different revenue sources for those premiums and deposits is very, very different. We can see pension and risk transfer went way down from $756 million to $137, and guaranteed investment contracts went from $1 billion to about $2 billion in the same period of time. Sources of income stayed mostly flat, with the biggest reason for this slight downgrade coming from their underwriting margin going down, and adjusted pre-tax operating income also fell. And so since Corbridge deals with retirements, money, annuities, insurance, things like that, they do have to hold a very large investment portfolio. And I do like to see that their portfolio is very, very well diversified and a very high quality portfolio at that. So here we can see all the different types of investments that they have. Most of it is in fixed income, which I do prefer for companies like this because it's an income that's much, much easier to predict for the company. And so we see down here 97% is in fixed income or short-term investments. 94% of those fixed maturities are investment grade, and their average credit quality is A, which is very, very, very good. And so I hope looking at their most recent investor presentation was educational. I hope you learned a little bit about Corbridge. But before we move on into their financial numbers, I do want to ask that you please like this video and subscribe to my channel, as both those actions really mean a lot to me, and they help me determine what kind of videos you guys want to see and what kind of videos I should make next. Thank you guys so much for watching this video. I really appreciate it. And so with that, let's get into the financial numbers. One small note I forgot to mention, since Corbridge IPO'd in 2022, there isn't a ton of data for this company as an individual company, but there is a little bit of data from their time under AIG. So in some instances like this, we will have 5 years of data, but in other instances, we might only have 2 or 3 years of data. So it will vary a little bit, and that's just due to the spinoff. So I apologize in advance if something doesn't look complete enough. But with that, annual revenue has grown nicely at about 10% per year since 2018. EBITDA has been quite variable, and that's pretty common for companies like this. Though with Corbridge moving to more fixed income and fixed annuity type products, hopefully this EBITDA number can begin to stabilize over time. Operating earnings have also been quite variable, although in this case we do see a little bit more of like a general uptrend, so I'll give it a pass. 2021 and 2022 were clearly very, very good years, though I would not consider them ordinary years. Corbridge's operating margins fluctuated quite a bit as well, and that's again due to the nature of their business. There's a lot of different moving parts, a lot of financial things going on, but the company has always remained positive, and I would say their average is probably hovering in the high teens to low 20s, which is pretty solid. I don't mind that at all. The company's return on assets are showing a little bit of an uptrend, and they are fluctuating quite a bit as well. But for a financial institution, I would say that they're in a decent spot with the return on assets sitting around 0.5% to 0.75% on average. Since Corbridge has only been a publicly traded company since 2022, we do not have a lot of data, but it does appear to me that the company is aiming to buy back its shares quite rapidly. Cash and short-term investments have stayed very stable over time, which is also nice to see, as it shows to me that the company is pretty good at planning around its cash on hand and making smart investments that pay off when they need it. Debt has fluctuated a little bit more and has grown slightly from $11 billion in 2019 to about $12 billion in the trailing 12 months. But since 2022, the company has made sure to pay off a substantial amount of their long-term debt, which I always love to see as an investor. Net interest expenses have gone more negative over time, which makes sense, especially for a company that has a decent amount of debt on its balance sheet, though I do not think the $618 million that it paid in the trailing 12 months is going to have too much of an effect on its balance sheet in general. Free cash flow is generally positive, although in 2022 it was negative. So I think this is an area where I trust that Corbridge will probably remain free cash flow positive over time, but there really hasn't been enough data to know that for sure. On a per share basis though, with a little bit of manipulation, this number does go back to being positive. So like I said, it's something to watch for Corbridge, but I do think the company will be able to manage to be free cash flow positive in general over time. The stock does pay a dividend, and it has grown nicely since 2022 from 46 cents to 92 cents over the trailing 12 months. And I do not expect that rate of growth to keep up by any means. It'll probably slow down quite a bit, as in 2022, the company was brand new and just starting to kind of ramp up its dividend payouts. So like we saw earlier, they're at about a 55% payout ratio, and the company's aiming to be at 60 to 65%. So I do think it's possible for the annual dividend to go up from here and probably go up pretty sustainably, although it's not going to be very fast. It'll probably be a pretty slow, low digits growth as the company matures. And so here we can see that Corbridge's average dividend yield over time since its IPO has been about 4.29% per share, with its current yield sitting at 4.25% per share. So basically sitting at fair value, with fair value represented by this red line here at 4.29%. So with the age of this company, there's really not a ton of information that we're going to gauge from this. I mean, 4.25% might be a really good time to buy in 5 years when the company might be yielding like 2 or 3%, or the company might be yielding 8% in 5 years. We really can't tell just because it is such a young company. What we do know though is that the payout ratio for its dividend is quite safe, being only 10.75% in 2022 and about 52% in the trailing 12 months. So the dividend is very safe, and I don't expect the dividend payout to go down anytime soon. On a price to earnings ratio against their 5-year average, we can see that their 5-year average PE is only 4.64. And their current PE is 6.39. Now, technically, that would mean that Corbridge is overvalued by almost 40% based on its 5-year average PE. But since they IPO'd in 2022, and they did IPO at an incredibly low PE of less than 2, I think this really skews the average PE to a very low number. And so, of course, even if you bought this company today at a 6.4 PE, I would expect there to be some PE expansion and the company to trade at least 8 or 10 or 12 PE in the future, which is pretty close to what many of their peers trade at. So while this chart says that the company is currently overvalued, I would say that the stock probably has plenty of room to continue to go up, as long as earnings continue to go up as well, obviously. And finally, moving on to the value chart, this really shows off the very low PE that Corbridge has, because I have inputted a fair value of 15, which is what I use for most companies in general. And that would give us a fair value for Corbridge of almost $51 per share versus their current trading price of just under $22 per share. Add on top of that Corbridge is expected to grow by 16.6% per year for the next 5 years, and there could be a ton of growth for this stock in the next few years. So to put that into perspective, if Corbridge does trade at a 15 PE in the future and it does grow at 16.6% per year, by the end of 2025, we could see this stock being worth $59 per share. By 2026, $69 per share. and by 2027, it could be worth $80 per share. So take that versus its most recent closing price of $21 per share, and that's nearly a 4x in 4 years. So very impressive potential returns. And so to summarize my thoughts on Corbridge and the company in general, what I really like about it is that there's some serious value here. The company trades at very low PE levels. It trades with a pretty respectable dividend payout right now. And financially speaking, the company does appear to be pretty safe. So I think the value is just kind of a result of it being spun off of AIG and people just not really being aware of it. I mean, annuities is not a sexy business. So I think it's just kind of a lack of interest and people are just finally starting to wake up to Corbridge. Second, management has seemed super shareholder friendly to start. It's only been a year, so that could change very quickly, but they have bought back some shares. They pay out a very generous dividend, and they do continue to think about those numbers at all times. So I think that management is trying to show Wall Street that this is going to be a very shareholder friendly company and they're going to return a lot of money to shareholders. And number three, as a company that works in annuities and insurance, they're less exposed to interest rate risk versus banks. So they might be a slightly safer financial company, at least in that respect, to invest in. And that's largely because banks usually liquidate their bond portfolios out of necessity. Think like Silicon Valley Bank. When depositors pull their money, they have to keep a certain liquidity ratio. And that just isn't as much of an issue for insurance companies because their insurance or their annuities are many years in the future, so they can plan for these things. They aren't caught by surprise from random customers pulling their deposits. And so now what I don't like, first and foremost, is just the lack of stock history. Since the company IPO'd in 2022, there really isn't a ton to gauge about how it would react in a 2020 or 2008 type situation where there's a lot of investor panic. Second, their variable annuities as a percent of their overall book is quite high compared to other annuity companies, and so that essentially makes their earnings fluctuate a little bit more, especially in times of market volatility. So that's definitely something to be aware of. If we go into more volatile markets in the future, you could probably expect Corbridge to be more volatile, both on the downside and on the upside. And finally, as an annuity company and a insurance company, and with all the hedging that they do, their finances get quite complicated. And so to understand this company really, really well, you probably have to dig into a lot of their books and really start to just understand the insurance industry as a whole. And the other negative with that is that it just makes their year-to-year earnings a little bit more difficult to predict because a lot of the stuff is just financial gerrymandering that does work towards a long-term goal and a long-term growth, but year to year can really fluctuate just because the company's forced to move things from their mark to market to like a holding part of their books, or maybe they have to hedge a certain portfolio that's really starting to struggle. So it all gets quite complicated very fast, and so it's just a difficult company to understand. So with all of that, I do want to give the quick disclaimer that I am personally invested in Corbridge, and I have been invested for a long time, long before I got this suggestion for this video. And I invested in the company because I did see a ton of value at the price it was trading at. And I do honestly still see value here. So I think that probably best summarizes my view on the company. I do think that it's a place that I'm willing to put my money in, but I do want to make sure that you understand that this investment may or may not be right for you, and that's not investment advice by any means. So please do your own research, and please make sure that you do not invest in this company just because I said I've invested in this company. But yeah, I do see great value here, and so far I have been quite happy with how the company has performed. So with that, I hope you guys enjoyed the video. If you have not already, please like the video and subscribe to my channel, as I cannot wait to put out more content just like this. Thank you so much for your view, and thank you to the commenter who suggested this video in the first place. And with all of that said, I hope you guys have a wonderful day.